Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Great you can join us again here at AusBiz for this shortened trading week as in between Easter and Anzac Day. Well, let's take a look at what happened overnight. Global equities beginning the week negatively. Sharp falls on Wall Street as US President Donald Trump launched blistering criticism of Federal Reserve Chair Jerome Powell, threatening the central bank's independence. The S&P 500 closed some 16% below its mid-February record closing high, with investors wary of falling further and entering a bear market. First quarter earnings season, that's gathering pace this week, with Mag 7 members Tesla and Alphabet reporting, along with Boeing, Lockheed Martin and 3M. Now, Tesla reversed sharply on reports that the production launch of its modified Model Y has been delayed. And AI heavyweight Nvidia fell heavily on news reports that Huawei Technologies is planning to begin mass shipments of an advanced AI chip to customers in China as early as next month. Analysts now expecting aggregate first quarter S&P 500 earnings growth of 8.1% year on year, down from 12.2% growth projected at the beginning of the quarter. Well, the US economy could slow unless interest rates are lowered immediately, President Donald Trump said, intensifying his criticism of Fed Chair Jerome Powell, claiming that there's virtually no inflation. The president said, with these costs trending so nicely downward, just what I predicted they would do. There can be almost no inflation, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now, he said in a post on Truth Social. Jerome Powell has maintained that rates should not be lowered until it's clearer Trump's tariff plans won't lead to a persistent surge in inflation. Fed member Austin Goolsbee has warned against efforts to curtail the central bank's independence, saying there's virtual unanimity among economists that monetary independence from political interference at the Fed or any central bank be able to do the job that it needs to is really important, adding that in countries where central banks don't have monetary independence, the fact is the inflation rate is higher, growth is slower, and the job market is worse. Well, as well as sending stocks lower, Trump's comments push bond yields higher as investors and analysts mull if the president has the power to remove the Fed chair. Excuse me. The Fed next meets early May, widely expected to hold its benchmark interest rate steady. And the US two-year Treasury yield fluctuated between 3.72 and 3.79%. The 10-year rose to 4.41%. And the US dollar has tumbled to its lowest level in 3 years as investor confidence in the US economy is further eroded over President Trump's attacks on the Fed chair. Taking a look at the Aussie, it's trading at 64.1 US cents and Bitcoin climbing to close to 87,500 US dollars. Oil prices, they fell more than 2% on signs of progress in talks between the US and Iran, while investors remain concerned about economic headwinds from tariffs that could curb demand for fuel. Brent crude futures down 2.5% at $66 a barrel. Copper down slightly, iron ore rising almost 1% to $99 a tonne, and gold surging above $3,400 to another record high as the dollar weakened amid uncertainty over the economic impact of US-China trade tensions. So let's get across what we're seeing, particularly on Wall Street. Steve Sosnick joining us from Interactive Brokers. Steve, welcome back. Good to see you. Let's start with those comments from the president. Brutal. He calling the Fed chair a loser, that he's too late, he's slow off the mark. Look, what is the prospect that he could dismiss Jerome Powell? Does he have the power?
Well, good morning, Andrew, and I hope you enjoyed the long weekend and the short week. It's not clear how much power he has to do this. Apparently, you can't. The only way that they could fire the Fed chair is for some sort of gross negligence or something of that matter. In theory, he hasn't done anything that would rise to that level. In reality, one person's law-abiding citizenship could be gross negligence in the eyes of the president. So it's a little murky. Let me remind everybody that the person who appointed this loser was in fact then President Trump. So just like the USMCA deal, which he claimed was the worst ever, which was negotiated by him, This is, another way of him sort of, disassociating himself from the past from the present. Um, but you know, it's I think less important whether he can do this or not, but actually whether he does, because Goolsby comments hit it on the head, and that really raised the specter for foreign investors. And if you look at the chart of the S&P 500 during our trading day, you could see that around 10 o'clock when he made those statements, the S&P fell off a cliff. And pretty much everything with it. It wasn't, normal, a lot of times we see NASDAQ sell off more aggressively, but this was just the S&P 500. Everything sold off. Every single sector was lower today. That's just a bad read, and it's telling you that there's huge disaffection for comments of this nature.
Well, I mean, it leads to that, excuse me, that crisis in confidence in US markets. Look, one asset obviously that did benefit was gold.
Well, gold, we've discussed this before, that sometimes gold is a hedge against, global chaos. Sometimes it's an anti-dollar. In this case, it's both. It's benefiting from sort of the crisis of confidence that I think a lot of investors are seeing with the U.S. I think in certain central bank portfolios, it's probably playing the part of the dollar in terms of adding to the reserves and replacing some of their dollar reserves with gold. And just again, if you're trying to mark global commodity in US dollars, if the US dollar is weaker, well, then it takes more dollars to buy said amount of that commodity. So that's the sort of the anti-dollar nature of it. So all of that is working in gold's favor. Certainly, we had GDX, the index of gold miners in the U.S. hit a new high today at one point, because that's sort of the one sector that's in, it's not, doesn't rise to the level of full S&P sector, but that's a one little industry group that's doing well. But beyond that, there's not a lot of places to hide, and I think that's part of the appeal of gold, part of the appeal of Bitcoin, which was up today. Although I do think that got a huge assist from MSTR spending another huge quantity of money to buy more Bitcoin. So that didn't happen, and that didn't happen as, let's call it, organically as gold's rally did.
Meanwhile, we're in the midst of earnings season, of course, Steve. Some bigger results this week ahead, in particular, Tesla and Alphabet. What are the expectations?
Well, I mean, I think the key tomorrow is, first of all, the key overall for earnings season. And I think we have about a quarter of the S&P 500 reporting this week. Is what can they say about guidance? You had the graphic before of, the S&P 5, according to FactSet, 13% earnings growth was priced in December. It's about 11% now, maybe going down to 8%. But what we're starting to see here is, we know that the price earnings multiple of the S&P 500 fell. We don't know if that's multiple contraction, earnings contraction, or both. But the problem is, the earnings contraction would be sort of theoretical, not from published estimates. And I think we're going to have to figure out, are we going to get estimate revisions from companies, or are we going to get what United Airlines did last week, which was quite clever actually, in saying, if this set of circumstances if there's a good set of circumstances regarding tariffs and the economy, well, then our earnings will be fine. If not, well, then it's going to be lousy. And so, the market kind of gave them a bit of a pass, because one of the fastest ways to make your stock drop by double digits after earnings report is to cut guidance. So I think there'll be some selective guidance cutting. I think from Tesla very specifically, um, there's a real crisis of confidence there as well, because the brand has become so politicized, and Elon Musk, admittedly, obviously, is not spending the majority of his time managing Tesla. He's doing plenty of other things, government related, and spending much more of his time in Washington than he otherwise would have. And so we had even some of the biggest Tesla bulls getting very cautious on the stock. So the question there will be, is the pessimism priced in, or is there more to come? And, can they give any sort of guidance, or what will be sort of the bright, shiny object that comes out, because they're very good at that with some sort of distraction. Don't look at the fact that we're not selling many cars. We'll have robo taxis, pick your date. So I think there's a lot of moving parts there. And Alphabet, again, I think it's going to be guidance, and they're they had this they just had this trial against them. What is that going to do to some of their earnings? So there's a lot going on, and there's so much uncertainty. And the weird part is, we're all hoping that earnings season will clarify a lot of that uncertainty, but yet it doesn't appear that it has. And I see the graphic below. Has the storm passed, or is this the eye of the storm? I wrote that last week when things were a little calm. Today, I sort of have the sense that the eye of the storm might have been the little calm that we experienced, because again on Thursday we sort of ignored the initial round of Powell slagging from the president, and then of course that was much more in the focus today.
And of course, the tariff situation has not been resolved. In fact, particularly with the US and China, you would expect that trade between the two countries would be at zero now, given where those tariffs are. Well, when are we likely to see the effects of those tariffs come through in the data and perhaps influence consumer spending?
It may take a little while. I think, in some ways, retail sales were very mixed last quarter. The last report, I should say, last month, where autos were very good because people ran out to buy cars. Those who could do so did, if you're on the fence about buying a car, you went out and bought one last month. I did not. And it's interesting because I went to the New York Auto Show on Good Friday. No, actually I went on Saturday, and people, the place was still full, but they were a little cagey about pricing because nobody's really quite sure how it's going to affect certain pricing, and it's going to be across the board. I think it's going to take a little time for this to go in drips and drabs. I think the reason we got a little bit of a pickup at the end of the day today was there were reports, but really sort of cagey reports, not official government reports, that there was a meeting to be held between key executives at Walmart, Target, Home Depot, Lowe's, some other big retailers. I'm guessing the big tone of that was, can you back off some of this tariff talk because it really hurts our businesses and it'll hurt our customers? But nothing seemed to come out of it in terms of the tariff deals. In theory, the trade representatives should be negotiating with China. No progress there. In theory, there's also should be deals coming out, bilateral deals with a wide range of countries. As of now, there haven't been any. It's a little soon. It's early in the 90-day period, but this is all part and parcel of the uncertainty that I think we're going to hear from companies in terms of their inability to offer good guidance and their inability to plan for the next few months, let alone few years, because the situation is so uncertain.
Steve, great to get your analysis again. Thanks for joining us on Interactive Brokers.
Thanks, Andrew. Take care.
Let's turn to the local market just a couple of minutes before we open here on this Tuesday. SPI futures indicating we're going to go higher, but bear in mind that was actually based on the closing prices on Thursday. So a lot has happened in between that time, of course, given those sharp falls we saw on Wall Street. Stay with us. The open is just around the corner.